Okay, party people, welcome back to another incredibly epic episode of the Small Axe Podcast. Today, I'm here recording from my back deck. It is a beautiful day. And I want to get real for a minute. Everybody thinks that the hardest part of multifamily is finding deals. And that's what most of us obsess over when we start out, right? Hunting on LoopNet, Crexy, chasing brokers, running numbers late at night, going off market, cold calling, cold texting, cold mailing, whatever we're doing. But let me tell you the truth, guys. The hardest part of this game isn't finding deals, it's now finding the money. And that's not just true for me. It's true for anyone trying to get in multifamily right now. Capital is the livelihood of this business. And without it, the best deal in the world goes nowhere. And like I said, it's not just me. I am seeing really big operators struggling as well a bit to find the capital to close these deals. When I began my journey with the Jake and Gino community back in 2019, they used to hammer the idea of cycles, and it's crucial, so important. After the great financial crisis in 2009, 10, 11, you could trip over and find great deals. They were everywhere, but nobody had the capital. Banks were tight, investors were scared, and people who had money were sitting on the sidelines. Fast forward then to 2020, when I basically started my journey, through 2022, it completely flipped. Capital was all over the place. Investors were throwing money at anything, sometimes blindly. Guys, I was able to do a $2.6 million raise for basically my first raise. It wasn't easy, I'm not going to lie, and it was kind of crazy, but it was possible. I don't think I could do that right now, given all the experience I have. Good deals were hard to come by then, and that imbalance created the bubble. People overpaying. So 2020 through 2023-ish, good deals were really hard to come by. It was extremely competitive. Everybody's buying, everybody's overpaying. If you were in the game, you saw it. And that was an imbalance that created a bubble, chasing crazy returns that just weren't really there. We had insane rent growth for 2 years that then plateaued or started declining. And here's the truth, guys, everything is cyclical. We can't just sit around today and wait for the market to magically line up, because when it shifts, a different bottleneck shows up. Right now, at the end of 2025, deals are still out there, but the money, that's the bottleneck again. So I'm seeing it, guys. I'm seeing 20, 30, 40% discounts in today's market on today's deals from what was very different 3 years ago. And I'm also seeing the competition pull out. Buyers are not there. The fake operators are gone. People that are going to be in this for the long term are still in it. Those of us who are going to be in this forever are still in it. Those of us who are just kind of hopping in to enjoy the ride of learning how to invest in multifamily and being a multifamily investor and branding ourselves and quitting our W-2s and getting all in multifamily. Well, guys, a lot of people had to go back to their W-2. A lot of people had deals that fail. A lot of people had capital calls. It is freaking crazy out there. And if you are not in the know, if you're not fully committed to this game, you're going to get beat up and chewed up too. It's just the way the game works. And I'm sorry for those of you who are out. When I do something, I commit. I go full force. I don't go half in, guys. I got to be all in. It's the only way to do it, especially in this business. If you understand anything about this business and you started offering on deals and you're seeing what's going on out there, it is very competitive. It was even more competitive in 2020 through 2023 when I began and started buying things. Now, yes, I'm seeing less competition, but I'm also seeing prices go down. Again, 20, 30, 40% discounts from where we were in 2022. What the heck does that tell you? That tells you that this is a perfect time to buy, whether we're at the complete bottom of the cycle or not. It doesn't matter. Today is a discount from where it was, meaning it can go back up to that price point at some point, and it likely will. So what are we going to do about it? If you're an operator, you've got to double down on building relationships and strategic partnerships today, because raising capital is freaking hard right now. I'm seeing so many people struggle with it, including myself. Today has been the hardest I have ever seen to raise capital. And that doesn't mean that there's issues or problems with the world. It just means that we're in a cycle and people are pulling out and investors are pulling back and being a little bit more cautious. And maybe there actually is less capital available to invest. But the people that do have capital ready to deploy need to deploy the capital. Because if your money is just sitting there waiting, chilling in a savings account, it's going to be getting eaten up by inflation. And you have to understand that. Guys, raising capital is not a side skill. And I'm learning that right now. And I can't just dish it off to somebody. bringing capital to the table, making sure my investors get involved in my deals, making sure they get good deals is difficult. It is the skill, not a skill. And again, you can't just be the person sitting there with your money sitting on the sideline, hanging out in a savings account because it's going to get eaten up by inflation. And that is huge. People don't understand the value of money. That is a huge issue. People don't understand that if your capital is just sitting there, it is losing value every single day. You have to deploy your money wisely. You want to put it into investments that cash flow today under today's conditions. And the key is not just chasing high return, it's finding the right operator that you can trust. Someone who puts capital preservation first, capital growth second, because the fundamentals of real estate investing have never changed. You get consistent cash flow, you get huge depreciation benefits, you get principal pay down, and you position yourself for long term appreciation. Whether people invest for appreciation or not, or whether your thesis is to invest for appreciation or not, it doesn't matter. Historically speaking, prices go up. Yes, they might dip for a market cycle, and that is a cycle. Market cycles can be anywhere from 3 to 15 years, if we have seen. Typically, it's a 7 year cycle from the bottom to the top. And that's the recipe, guys. You have to keep investing. You have to deploy your money into an asset like multifamily that you feel is going to provide you with a good investment. And over time, you will see the benefits of that. But it doesn't happen overnight. You don't just invest and it goes up 20, 50% and then you capitalize it. It doesn't work like that. It's not like the stock market, but it's also not as emotional and roller coaster ride-y like the stock market is. So people out there looking to do deals, I'm sure there's more of you just like me. There's operators out there that are looking at deals and they have a good deal in their hand, but they just can't get it closed because they don't have the capital to put it together. People that are liquid right now, people that are ready to deploy money right now are the people that are going to win 3 to 5 years from now. And 3 to 5 years from now, people are going to look over their shoulder and say, I wish I would have invested 3 to 5 years ago because now the market is peaking again. And at this point, it might just be too late for you to get involved at a quote unquote discount because there might not be a discount. Yeah, maybe interest rates will be lower. Maybe you can try to get a deal to cash flow. But at that point, prices go up. If interest rates drop, prices go up. So you want to buy and be able to cash flow today at a lower price point and a higher interest rate. Because if it does drop, you can do a cash out refi. You can sell. This is the time to buy. And again, we're not claiming that this is the bottom of the market. It might be, it might not be, and it doesn't matter. You buy at a discount. And if prices continue to go down, good. You buy another one tomorrow at another discount. So let's remember this, people. The hardest part of multifamily is not necessarily finding the deal. When it was a few years ago, today I don't think it is. And it's not for me because I really specialize in it, but it's finding the money, finding the partnerships, finding the capital to put the deal together, and knowing how to allocate that capital into the right deal. I don't want you to wait around for the perfect market. I don't want you to let fear or analysis paralysis keep you on the sidelines. You have to play the game today with the fundamentals that have always worked. History, guys, this is historical. Preserve your wealth, grow it carefully, and position yourself for when the market cycle swings again, which it will happen. Last week, I was talking to an investor who has an excellent mindset. She's just getting started out, really eager to be involved, and she decided to partner with me rather than find her own deal. Why? Well, for a few reasons. Number one, I know what I'm doing. I can help her learn and grow. Number two, I can get her into a deal faster. Number three, if she is just starting out in the market looking at deals, it could take you at least a year to find a deal. It took me 3 years to find my deal. This is the way for her to fast track her journey, get involved, and start learning and earning at the same time. Last weekend, I spent a long time recording my Buy Buildings, Build Empires course. There are 8 modules in that course. I now just have to sit there, go through it, edit it, and then get it ready for distribution to you guys. I plan on selling it. If you want early access to it, just reach out, DM me. And if I have enough people that are requesting early access, I will offer some sort of discount for those people. If not, then I'll just sell it as is, full package, full price, whenever I get it done. It might be a month, it might be 2 months, who knows? But I'm working on it and I'm still cranking away. You guys know I have 4 different jobs. I work all the time. I am not chilling. Don't think that I'm ever sleeping on the sidelines. And I don't want you guys sleeping on the sidelines. I want you to be involved. I want you to be active. And if you are not And if you just don't have the time to be active, you got to reach out to me because I am the active person. I can help deploy your capital. Talk to me. Being an LP is actually sick. I plan on being an LP my entire life. I don't have the capital right now to deploy to be an LP, but I am the operator for you, and I want to be your trusted operator. So, guys, reach out to me, DM me, email me at info@smallactscommunities.com. And I want to say thank you so much for hanging out with me today. And if you got any value from this, just keep tuning in. I want you to share it with somebody that you think could also get value. And I will keep bringing the truth to you guys. That is my goal. I try to be transparent, open, honest, genuine, and operate with integrity. My ultimate goal is to help you guys carve out your own empire. Say that maybe I helped you along the way if I do it all. I want you to take out your small axe one chop at a time, whether that be working on your own deals, whether it be working on finding a deal as an LP, whatever it is, you're working on something towards building your own empire, your own future to help out you and your family, guys. I will catch you on the next episode. Have an incredible week. Enjoy everything about it because life is good and I love you.
All right, and that's a wrap, Small Acts community. So I wanted to take a minute to say thank you so much for listening to the show. And if you liked it or got any value from it, it would really mean the world to me if you would share it with someone else and write a review. Remember, guys, keep sharpening those axes. Let's get out there. Let's crush it. Love you guys.